Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. Hello everyone. Welcome to another Tuesday webinar. So today I want to look at something slightly different. So what I've done is I've just done a quick Google search to find out what's the best performance sector this year. Okay, so just scroll down here. I'm gonna have a look. So it's sort of broken down into, so I have it down as year to date. So I've sort of broken it down into each sort of sector for us. Now we can see that energy has been up 52% for the year, and then all the rest of them have been down. The one that's been close to the break even is utilities. And then consumer none. Okay, then we have transportation, financial, retail, basic minerals, and capital goods. So that's something that we sort of need to know. It's things that we want to know, we want to make sure that we understand which sector is a good sector to be jumping into. So we can see that overall, the only one that's been up is energies. Now we want to have a look and see how that has broken down into sort of quarterly and sort of monthly. So if I go down sort of to the quarterly breakdown here, I can see over the last quarter, energy has still been the biggest performer. Look, over the last quarter, energy has still been the biggest performer. Financials down here bringing up the bottom, and capital goods here has had a really good run here of 8.5%. Drop down to the monthly sort of breakdown on this. So over the last month, we can see that capital goods has been the outstanding performer, then basic minerals. So we can see here now, if we look at this over the last month, we can see that energy stocks, our sector, has dropped down to 9th or 10th place. So we can see here that these are starting to make a run. So technology is up 7%. Is this the beginning of the technology run? Consumable discretionary, is this now a run of those? Basic minerals up 10%. Capital goods up 10%. Now, do I need to go down any more into more detail? And it's not massively, but it's worth having a quick look at the weekly. So you can look at it on a week by week basis to see what has been moving the most. And again, no coincidence here that capital goods has been on top of the monthly, and now it's on top of the weekly again. Look, technology is also here, third. Basic minerals, consumer discretionary again. Conglomerates after popping up here in number 2. So it gives you a sort of an understanding of where we should be looking to trade. Now, if you're sort of struggling to understand what each of these sectors are, just type them into Google. Find out a little Google search. What is capital goods? What is technologies? What are basic minerals? Consumer discretionary, healthcare, service. What is the breakdown of these stocks if you don't understand them? Another little handy thing on this website here is that Like I've said, if you don't understand it, just stick it into a quick Google search and it will tell you what it is. But if you have a look at this and click on capital goods, whether it's capital goods, conglomerates, technology, just click on it, capital goods. And now look, it breaks down into what is going on here. So if we break them down, look, aerospace and defense industry, construction, mining, services, miscellaneous manufacturing industries. Okay, so it breaks us down into detail of what's there. Okay, that's a chart over year. Just goes to show what's after happening. So this is down, this sector alone is down 26. The low down here was 28%. It's now had a rally of 16. So it just gives you an understanding of what's going on with different sort of industries, how they break down, how they actually make up this sort of industry, how we look at these. So don't be afraid to sort of play around with that. Don't be afraid to jump in and use it. It's a free tool there. Just jump in and start using it, okay? CSImarket.com. Just put it into the search and you can have a play around, have a quick glance at it, have a quick look. And it just gives you a little overview of what's going on in the market, how it's represented, how we actually see the sectors are performing. And then once you find out what sectors are performing well, then you can go from there. Now there are loads of other softwares you can use to actually do that. I know one of my colleagues uses TC2000. He pays for that, and that has all that sort of stuff in there. TradingView also has it all in there. You just have to go looking for it. But this was a very easy visual representation of what's going on monthly, quarterly, yearly, and it gives you an idea of how that's affecting your sort of portfolio. Anyone in energy heavy stocks this year is up money. Anyone that is heavy any other sector has lost money. It's literally as simple as that. And then when we look at some of these energy stocks, it's no coincidence that they're flying. No coincidence that this is the likes of them this year. Oil and gas, energy, look. Likes of Oxy. Look at this run. It's been brilliant. There's a few more there that I have. Again, the likes of this. PXD. Come pretty flat as of late. EOG Resources. What is the likes of the energy companies done? So Royal Dutch Shell. Pretty much like Oxy. Look, absolutely flying this year. Exxon Mobil. Again, look, flying. Now the question is this the end of the energy bull run? Or is there more left out on it? So it ties up here. Is there, if the likes of this here, we have a pullback into this sort of section here. Look, so we have a pullback here. So if I get a sort of a little low test bar there, if I get a low test there at that particular point, is that a trade there? So if that bar plays out like that right there, is that an entry for us? Sorry, this is a short position, a long position. Are we looking to jump in there? Entry there, stop loss below it. And before it got to the high, I wouldn't be going any higher than that. And that will be a 1.5 to 1 winner if that kicks off. Now the question is does a oil still have more upside? Is this the phase 2 hits this break and retest? So it broke and then retested this level. If it comes back and hits this level, is this the next bull run on this? Is this the next run? We look at the earnings. Earnings has been good. Revenue has been good. Earnings good. Revenue good. Do we expect it to still be good with what's going on with the energy prices? We have reports there that Russia's being capped at $60 a barrel. Is that good or bad for the likes of Exxon Mobil? Is that good or bad for the likes of Oxy? Any of those oil companies? Are we better off holding on to this now still long term? Or if it breaks and retests here from the other side, should we now be shorting this from the high? So if we get a pullback here, should we now short that? Is that what we should be doing? Looking for this to hit here and then drop again. So would we be looking to take a short position at that particular point? Entry, stop loss. Understand we don't have an entry and a stop loss here. I'm sort of making it up, playing devil's advocate. But come back, entry there, stop loss above it, and then watch this drop somewhere down to about there. So inside this horizontal. Which of those two scenarios do we think is now going to run? Are we going to get a little bit of a bull run on the likes of these indices? We're in a bull run at the minute. Okay, so the Nasdaq not so much. Nasdaq is pretty flat. That is massive tech heavy. Now from seeing the year-to-date calendar, we can see that technology is doing really badly. Okay, so that's why that's done really badly. Where we can see the S&P, look, it's actually making higher highs and higher lows. If we go on to the Dow, look, is actually broken this previous high here. So the S&P and the Dow are in bull runs, whereas the Nasdaq is sideways. Whereas we have historically had the Nasdaq outperform the other indices by 10 to 15%. Whereas at the minute, so this is the Nasdaq, the European markets, look at the recovery there. The China market, look at the recovery here again. The Aussie market. The Japan market. Okay, so these other indices are far outperforming the Nasdaq at the present moment. So are we better off diversifying from the likes of the US, or is it that we have loads of room to recover on the US market? Is the recovery on the likes of the Nasdaq going to be huge? But don't be afraid to jump into the other indices. There's loads of them there, whether it's a sector on energy, whether it's technology, whether it's consumer goods, whatever it is, consumable, whatever sector you want to get in, make sure you have a long-term play. Make sure you're looking into it and see, has this a good recovery growth over the next 3 to 6 months. Okay, everyone, it's been an absolute pleasure. If you like what you've seen and heard, jump on to my webinars. They're every Wednesday and every Sunday evening. I do them live at 8 o'clock every Tuesday or Wednesday and Sunday. So don't be afraid to jump in on those. If you go to my website, henry-ward.co.uk, you will see all the details for them, or click on the link below.